Quarter two so far, it's a decent uptick, 5% sequentially, 40% on a YY basis. Phillip Capital has gone ahead and increased the target to 8,500 rupees. For Vinity Organics, quarter to date exports at 121 crore in the month of August is 121 crores, which is an increase of 38% YOY, which is primarily driven by growth in the ATBS segment of around 43% and also butyl phenol and their antioxidants business. For SRF, the exports are down 2% on a sequential basis. Quarter two so far, it is down 10% on YOY basis. Yes, there was a recovery in specialty chemicals, but the other businesses didn't do so well, and that is the reason why there was a downtick. So overall industry didn't do so well, and that's why these stocks will be in focus today.
All right. Thank you very much for that, Sonal. And good to get that. Well, just a couple of seconds to go as well. That's the opening bell going off. What do we have? It's a higher start, most definitely. A third of a percent in the Nifty Bank, I can see. 0.4%, so we are at about 25,022 at this stage. That's a 0.4% pop. The Sensex is up almost by that much as well. 81,820. Bank Nifty is up a third, 51,166. Mid-cap index is even stronger with a full near 1% gain. On the NSE Nifty Mid-Cap 100 Index. There you go, 600-point bump, 59,535. The heat map is all green, only 3 names in the red. There's Asian Paints, Nestle and ICICI Bank. Tata Motors is undecided, no change, and everything else is starting up higher. So 25,025 is the start and on expected lines this morning. Let's see where we go from here. Prima.
Superb opening for the mid-cap index. So the mid-cap index is a gain of 1%. The Nifty small-cap index is also opening up with strength. That's up 0.8%, with the advanced decline ratio boasting of 8 stocks advancing for 1 in the red. Sectorally, metals are leading the charge. The Nifty Metal Index is the top-performing index today, 1 1/3 higher for the Nifty Metal Index as the dollar came under pressure overnight. This is followed by strength in the PSU Banking Index. That too is up nearly 1%, and IT is strong, drawing strength from that 2% Nasdaq rally. In terms of individual stocks, it's Tata Steel. They've secured that $500 million funding. So Tata Steel is up 2.5%. Hindalco giving it company on the way up. Shriram Finance has been moving well off late. The stock has gained, it's up today and it's up nearly 3% this week. Bharti Airtel is consolidating above 1,600. And in terms of IT names, it's Tech Mahindra, LTI, Mindtree higher. BPCL, which reversed its gains yesterday to close in the red, has opened up with strength. So 1.3% up on BPCL. And in PSU banks, it's State Bank of India, which is higher. On the way down, you've got M&M opening in the red. Perhaps some disappointment because this time there is no subsidy scheme for EV four-wheelers. So M&M is down 0.5%. Nestle is seeing a bit of a correction, but again, Nestle has had a good run. Nestle is open in the red. Asian Paints too correct. I think Asian Paints has been closing up higher for the last couple of days. It's had a one-way run for, I think, a couple of 5-6 days now in a row. So some profit booking visible in Asian Paints and ITC. But all in all, straight away off the bat, we're above 25,000 on the Nifty, 100 points higher. Sensex surging more than 300 points, with the broader markets outperforming.
Well, that's right, Rima. And, a few stocks that should be on a radar. Honasa, Nimesh tells us that large trade has taken place. That's up for you on the screen. 10% equity changing hands. Explains why the stock is down close on 5%. Because the deal happened at a bit of a discount in comparison to yesterday's close. So that's one of the top volume movers because of that large trade. Prism Johnson, law of gravity seems to have caught up. The stock is up close to 30% just in 2 sessions. It's down close to around 3% odd. Let's see whether or not there is something material in the offing, whether it's with regard to a corporate action or some other rejig of the business. We'll have to wait and watch. For the time being, the stock is down 3.5%. So keep an eye out on Prism Johnson. The other big movers, you have Varun Beverages. Something's got into that one. It's up close to around 5%, flying away as we speak. So big move is what we're seeing on Varun Beverages. Suzlon Energy, dream run is what the stock has seen. It saw a bit of profit taking. Now in the last few days, it's moving almost circuit to circuit, up 5% even in today's trading session. Inox Wind as well is up close to around 3%. So good move out there. And the metal pack is bouncing back a little bit. It got a bit of a dropping yesterday. Last couple of sessions was a little bit weak. Vedanta is moving on high volumes. A good up move out there. Rima already mentioned Tata Steel. Zomato as well is participating. Zaggle as well on the upside. So Zaggle and Zomato, both of them, they seem to be moving very, very well. And they're back in the interest list of a lot of buyers. And both those two stocks opening up with high volumes on the upside. The other one that we're looking at from the frontline names is Oro Pharma. blazing away. So just keep an eye out on that one. Oro Pharma is doing very well in this morning's trading session. And just to highlight one more name, PI Industries, we had highlighted the stock earlier today. It's been making fresh 52-week highs. Yesterday, it saw some profit taking. The sales data that's come out is looking pretty impressive. So we'll keep an eye out on that one. A stock that's making fresh highs is something you should keep an eye out on.
All right, so we got a 120-point pop now on the Nifty. We're at about 25,035 on the index. So holding the gains that we started with. Now, just a few more names before we get in our market master of the day. Electra is coming up with another 4-5% gain. It's got very large volumes as well. It's number 2 on the NSE volume board. 1689 on Electra. Look at the 500,000 plus shares there. Zaggle, we mentioned. Zaggle was a big 10% pop yesterday as well, 4% today. Nazara is coming up with a 3% gain. So 992 on Nazara. Nazara, I think, was also on D Street Chatter a couple of days back. So there's action there. Inox Wind is starting 2.5% higher, 244. There is LIC Housing Finance, which is up 2.5%, 692. PNB Housing as well, I saw. PNB is, is almost re-rated or in the process of re-rating because it's done very well this month. I think about 20% so far this month itself. So we've got what else? I think then MTNL is up about 4% and smaller names. EPAC continues to charge higher, 324, 3.25% in the green, and so on and so forth. On the downside, there is, I think, only Honasa, which is a noticeable large volume-led loser. Raymond is coming up with some volumes as well. Raymond is down 3%, 1860, and there is some pressure. And Piramal Pharma has had a bit of a one-way kind of a move. So it moved up from 175 to 230 or so very quickly in 10-12 trading sessions. And that is seeing about 1.25% lower. Prism Johnson, I think Nigel mentioned, was a big mover yesterday. It's pulling back about 2.5% as we start. Century Textiles has been the other big mover recently, and that's about 1.25%. These are just sort of, day-on-day kind of pullbacks or whatever you want to call it. But just retracements. RR Kabel is another one, big mover yesterday. There is Ecos Mobility, which has rallied quite a bit after listing recently. So that's the kind of market we seem to be in. 115, 120 points higher is what we have on the Nifty.
Just some more stocks. MGL is up nearly 2% today. Jefferies has raised the target price to 2,120. They're saying there is a volume growth improvement in Mahanagar Gas. So that stock is opening up with strength. Kalyan Jewelers, which Mangalam highlighted, where HSBC has put a target price at 810. That's opening up with strength. Other housing finance companies too are higher, whether it's LIC Housing Finance or Aadhar Housing Finance. That entire pack continues to gain ground. And even Root Mobile, where the promoters with the offer for sale will bring down their holding to 75%. Despite that 6% expected sale of shares, supply of shares, Root Mobile has opened up in the green today.
All right. Well, so that's essentially the lay of the land with what's up and what's down, what's moving. Ashish Gupta is Chief Investment Officer at Axis Asset Management Company. Ashish, good morning. Great to have you with us here on the program. Thank you very much for your time. I want to start with what I think is pretty close to your heart as well, which is financials. And more commentary around the fact that maybe large private financials and their time is nearing in terms of for them to do well. Because everything else has done so well, and here there is some valuation comfort and et cetera, et cetera. I just wanted to start there. Are we at the cusp of something, or you think it's going to be a regular kind of sector and one should really hope for any outsized kind of gains, maybe relative outperformance from here? What are your expectations from the space, large private financials?
Morning, Prashant. No, I agree with you. I think what we have clearly seen in the past few months is the participation in the market moving to sectors that had lagged. So if you see in the last couple of months, sectors like healthcare and IT have done better, despite really no dramatic change in their growth outlook. Maybe some of the concerns that were there on the IT sector growth have receded a bit, but really there's been no dramatic upgrade to earnings. And on a similar sense, I think the financial sector does look, as you mentioned, fairly attractive in terms of valuations. I think what is really needed is the overall liquidity environment to improve. More than really even rate cuts, I think the central bank stance on liquidity is very important, because I think that is what has been holding the deposit growth back. And lack of deposit growth has pushed banks to pull back on loan growth. So I think as that changes over the course of the next 6 months, given the fact that inflation is in control, I think financials should do better. The other factor I think that should play out more favorably is the fact that there were some concerns on the unsecured loan business in the past few months, and you would have seen the June quarter earnings. A few NBFCs and banks reported an uptick in delinquency there. The feedback we have from the credit bureaus, from the bounce rate, various companies are reporting that the situation is also stabilizing now. So I think both these factors should contribute to better performance from the sector. Of course, a huge re-rating also seems unlikely, because the earnings growth trajectory will be moderate, because as rates come down, bank margins will also moderate. So I don't think there's a huge case for an earnings upgrade-driven re-rating, but I think a valuation catch-up is certainly overdue.
Ashish, hi, morning. Rima here. Your view is that markets do remain overvalued across the investment part of the economy, and we may see normalization in these segments. So is your advice now for retail shareholders that perhaps we should book profits in some of these infrastructure, capital goods, defense, power, which have done exceedingly well in a very short span of time, and perhaps look to allocate it to some of the underperforming sectors? Is that the advice?
No, I think one part is certainly that we have to go where the earnings upgraded earnings surprises will come. And if we look at the June quarter earnings, actually, we saw these sectors continue to drive earnings. So overall earnings growth for corporate India moderated. If you look at Nifty, earnings that were down to single-digit percentage, but actually these sectors did have better earnings growth. So I think if I have a 2-3 year view, these sectors will continue to do well. So I would not really recommend that switching out of these sectors and move into defensive. But given the valuations, we have to be in stocks where we have confidence about the earnings growth actually coming through.
Okay, all right. Hi, Ashish. Good morning and good to see you in. Nigel on this side. Ashish, I wanted to ask you your view on PSUs. They were the toast. Everyone loved them in the last 3-4 years. You made big money out there. But off late, they've been underperforming a little bit. Anything you'll still like in the PSU basket? Some of those sectors went out of whack, but some of them, there are still some tailwinds. How are you placed?
Yes, so I agree. I think there were two real reasons for the PSU rally. One was the re-rating that happened, and second was the uptick in performance. If I look at several PSU companies, their growth outlook is still very solid for the next 2-3 years. So if you look at PSU companies in the power sector or the defense sector, I think their growth outlook for the next 2-3 years is still very positive. Some of the valuations may be expensive, and therefore there is some correction that is underway. But we still feel confident that over the next few years, these companies will do well because the growth tailwinds are there. We are not as positive on PSUs where there is not as much turnaround or that are more cyclical. But I think the PSU pack where there is 2-3 year growth visibility, I think that we are quite comfortable with.
Ashish, recently Axis also launched a consumption fund to just take advantage of increasing incomes, urbanization. Basically, India's expanding consumption patterns. In this consumer basket, how would you pick stocks?
So I think one thing we have really seen over the past 3 years, that even as the narrative played out that consumption had lagged the overall investment side of the economy, within consumption, there have been companies that have been benefiting from changing patterns, and the patterns could be related to what people consume as well as how people consume. Right. And I think that really opens up a vast array of opportunities. When we are talking about consumption here, we are actually not limiting ourselves to, say, one segment of consumption like FMCG. So when we talk about consumption, we look at the entire wallet share of the consumer, and that could be his spends on, say, even real estate. It could be his spends on tourism, travel. It could be his spends on automobiles. So it's actually a fairly wide basket where people allocate their spends to. And we find that even as there is some cyclicality in the mass consumption side, and it had a delayed recovery post-COVID, there are companies where you are seeing much stronger trends even through this. And that is the big opportunity, and particularly now where we are in terms of the per capita income and the inflection point in some of the product categories.
Ashish, just to pull back a little bit from sectors, etc., and the market itself, there's inflows, not a problem, right? So much money, as you can see from that Bajaj housing demand, it's just there. The domestic bid is so strong, so there are no dips. I mean, small dips, 1%, 2%, 3%. That's it. On the other side, there's a lot of supply as well, and you must be seeing pretty much all the deals, right? IPOs and otherwise. How is this going to balance out? Do you think supply at some point it'll all be easily absorbed, or will it at the margin start to overwhelm, keep markets under check? Briefly, if you can sort of weigh in on that. Yeah.
Sure. So I think that's a fair point. I think markets, as we know, are self-correcting mechanism. So if there is a strong inflow or demand for stocks, the supply also goes up. And we have seen the supply go up from various pockets. Supply has gone up, as you mentioned, because there have been large IPOs. Supply has also gone up because there have been very large private equity stake sales. Supply has also gone up because even promoters, both domestic and multinationals, have sold into this valuation expansion. So I think today, if I look just last 6 months data, supply is already in excess of the net inflow into mutual funds. But the fact that even the FII numbers have turned positive this year, there is very strong domestic retail interest into the market, has meant that the market uptrend has continued. So I think we are seeing further acceleration in supply. So the IPO pipeline over the next few months is actually even larger than what we have seen year to date. So we have to be watchful. And my take is that just because there is some consistent inflow into mutual fund and insurance companies, we should not be complacent that there cannot be any market correction. Because when sentiment turns and when some of the discretionary pockets, which are the FIIs and direct retail, pulls back, this magnitude of supply will be difficult to absorb.
Thank you very much, Ashish, for your thoughts and insights on the markets and individual sectors. Great chatting with you, and look forward to more conversations. Let's invite now Prestige Estates. Remember, recently the company raised about 5,000 crore rupees via the QIP. So to discuss the way forward, Irfan Razak, CMD of Prestige Group, is now with us on the show. Mr. Razak, morning. This is Rima here. So what will this 5,000 crore of fundraise be used for? Is this for expansion solely in the residential segment, or are you looking at expansion in the hospitality segment? And also, is a separate listing of the hospitality business on the cards?
Good morning, Rima. First, yes, we have raised this capital. Of course, it comes with a lot of responsibility. We have that much more now pressure on us to see that the company performs well and gives results as we go along. Part of this, 1/3 of this capital raise will be used for retiring debt almost immediately. And rest of it will be, 1/3 of it will be used for business development, and the balance will be used for infusion into various SPVs and general corporate purposes. And I believe that is the way ahead, and that's what we had planned, and that's what we had told in the beginning, and that's how we are going to handle this. Of course, we'll also have a lot of internal cash flows as we go along with the type of launches that keep coming as per the plan that we have. So all in all, I believe the company has a huge responsibility to use this amount properly and to see that it has the growth capital for future.
Now, your debt was nearly 8,200 crore as of the last updated figure. You're going to use 1/3 of the QIP proceeds to raise debt and perhaps some more from the cash that you generate. By the end of this fiscal year, FY25, what would your debt number look like, according to you?
I mean, I can't predict now, but obviously, if you ask me on the debt equity ratio today, with this capital raise from 0.65 to 0.7, we would have come back to 0.2. And with this cash, there will be net debt of only about 3,000 crores. And of course, we'll be retiring a fair amount of debt, both from this capital raise as well as from the cash flows that we come from the internal accruals. And then, yes, we need money for growth. We need money for business development. So a portion of this money be used for that.
Mr. Razak, hi. Good morning and congratulations on a successful fundraise. Lots of interest there and quite incredible, actually, the amount of fundraising which is going on and you know, how the depth of the market is just quite amazing. Just a quick word on the second part of Rima's question in terms of you know, new SPVs. Is it all the other 1/3? Is it going to go into residential purely, all of it? And in what way? As you said, SPVs, etc. I mean, if you can give us some more color.
Yeah. See, the last 1/3, as I said, business development, when I talked about it, it's to buy land, and that's to see that our residential business is fueled and we have a proper pipeline in the various cities that we operate in. The last 1/3 is our contribution to various SPVs. When I said that is, we companies also in the business of creating assets, both office, retail, as well as hospitality assets. And there will be a contribution that is required for that. So that's where this balance money will be utilized. And that will give us that stability and less dependency on more debt.
Could you tell us, you know, you must already have land parcels that you want to buy chalked up in that sense. And you know, you'd have sort of worked towards raising a certain amount of money to buy a certain amount of land. Could you give us a sense of what we are looking at, which cities, and some idea about from these land parcels that you would buy, what's the revenue potential going to be? Big numbers, broad numbers, but just to give an idea.
See, now the thing is, I cannot at this moment tell you what will be my revenue from the lands that we acquire. But when we filed our DRHP for capital raise, we have compulsorily to also list out that this has to be utilized. And we have listed out half a dozen lands where the company is already in discussions with or signed MOUs. And that money will be utilized for those particular lands. The details are there. Now, offhand, I can't give you a breakdown exactly how much is going to be used for which land, but it is in various cities. It's just not Bangalore. It is Bangalore, something in even in Mumbai or even in NCR. So this is where it's work in progress, and I'm sure that's give the company some very large revenues on top, right, as we go along.
All right. Hi, Mr. Razak. Good morning and good to see you on the show. I want to focus more on the Mumbai market. When I go for my evening walks, I see good progress at your Bandra project. So if you could, and there's a lot of interest out there, mind you, the high ticket ones. So tell us more about that. What are the, ticket price of these flats at Bandra? Also on your Marine Lines project, because there's a lot of demand out there as well. So what's the potential revenue, the ticket size, and how you see this revenue recognition on both these two projects?
No, I'm glad that you've seen this firsthand.
Yeah.
The mic that is the ocean has really met some good favor from the customers. We've also built a customer experience center with a show flat, which has been well liked. And the good news is we've sold more than half of this, almost 60%. The stock inventory has been, in fact, what was on the other towers where we'll have inventory. So it's a good thing, and we've got approval for both the towers. That also gives us a good feeling. And importantly is we started construction. So it's going to be quite a challenging task building, but I'm sure we'll reach there as the schedules. So also in Bandra is that's the Pali Hill project which you talked about. Even that has been quite challenging in terms of the terrain and everything else. And the team is really focused to see that we get off the ground and move ahead. And responsibility to the existing people who trusted us and for redevelopment. And they'll be also closely watching that how the progress is, and soon can they get their new homes. So that's how it is. And the sales has been good. In fact,
so just out of curiosity, what's the average selling price of the Bandra, Pali Hill and the Marine Line project? Because you've sold most of it.
I think the average selling price in the Marine Lines, that is Ocean Tower, is around between 80 and 85,000 on carpet. And similarly in Pali Hill is up to about 95 to 105,000. So that are the broad outlines. And of course, initially we started it for a number, but then it's now firmed up nicely. And I think the demand is still good, and we are looking for quality customers in both these projects.
Okay, all right, Mr. Razak. Well, every project comes with its set of challenges, but as you said, demand has been very strong. We wish you well, and I'll keep an eye out on that Bandra project as well when I go for my evening walks. All the best. Thanks a lot for joining in.
Thanks.
Let's focus on GMDC. Now, the stock from the start of this year has been a bit of an underperformer. It's corrected considerably from the recent peak, but the management in their annual report has given a big guidance by 2030. They are talking about revenues in excess of close to around 14,500 crores. To discuss business momentum, how they look at diversification, what's the way ahead, Mr. Rupan Singh, the MD of the company, joins us on the show. Hi, Mr. Singh. Good morning, and thanks a lot for speaking to us here on CNBC-TV18. Well, that one-year chart came up for our viewers on the screen, and the stock went to 500 rupees, and from there, it corrected a little bit. So we're going to break this interview up into three pieces. Your core business, the diversification plans with regard to the coal mining, and then the rare earth opportunity. So let's focus on the core business first. What's the lignite pricing looking like? It's an off-season because of monsoons, but do you see a bit of a pickup from here on? And what is the volume target for FY25 and FY26?
Okay. Thank you, Nigel. We have solved a problem which we were trying to solve for the past 2 years. That was how to manage the monsoon sales and monsoon production. Earlier, we were not able to produce, stock and sell. This year, we were able to stock 6 lakh tons of lignite and offload it during this time. So, of course, the quarter is yet to be over, but we have sold in excess of what we sold in the entire monsoon quarter last year in 2 months only. First quarter, the results, it was an improvement of 4 lakh tons over the previous year. There, we have solved the mystery of monsoon sales and production. We stock up and we sell during this time. This year, last year was again a year of great challenges. The prices collapsed and 3 of our mines struggled two because of production issues, and one because of capacity expansion issues. With new leadership, with the new chairman, all these issues were resolved. And you would have seen an uptick in our performance, physical and financial, from the last financial year.
Okay.
So that is a journey that we are continuing. The number that is currently flashing on the screen is 6.3 million tons. This was a year of crisis. But then again, even with these with the compressed production figures, we churned out a third best financial year in the history of the organization.
Mr. Singh, you know, which
Yes.
have rightly pointed out the volume number for last year, which an abnormal year, only 6.4 million tons. So let's get the number for this year. Give and take everything that you're saying, what should you end FY25 at with regard to a lignite volume target? And when do you get to that 12 million ton that you're talking about? Which year?
Okay, so we have budgeted a 10 million ton goal, which is aspirational, but we see ourselves comfortably in the 9 million plus zone. H1 would be ending soon. We are fairly comfortably placed.
Okay, 9 million tons from this year, we'll hold you at that number. You know, the other big trigger is going to be coal mining. Now, you have been allocated close to around 3 blocks, I understand. And you have a big aspiration out here to get into coal mining, which the street is quite excited about. And you've made some progress as well out there. So give us a few details. What is the total coal mining reserves that you have? By when do you start mining coal? And give us a couple of numbers. FY26, how much of coal can you mine? FY27, how do you see this ramp up on a per annum basis?
Okay, very, very clear plans. We have 3 blocks, 2 advanced stage of development, Baitarni West and Burra Pahar. The reserves are approximately 1.5 billion tons of coal. Out of this, extractable reserves are roughly half of it, 750 million tons of resources. GMDC already has a strong presence in Orissa. We are on ground in these 3 places, including Bhubaneswar, the state capital. We have a very important public hearing lined up on 24th September. We plan to break ground with our most prestigious mine, Baitarni West, in Q1 next year, and Burra Pahar by Q2 or Q3 next year. So in 26, we see groundbreaking and production of 1 million tons, and their peak rated capacity is for Baitarni West, it is 15 million tons per annum, and for Burra Pahar, it is 6. So we plan to reach these numbers for Baitarni by 2030 and for Burra Pahar by 2029. That is the biggest value and easiest value unlock after expansion of our lignite projects.
So you said 15 and 6. So by 2030, you should be mining coal of around 21 million tons, 15 plus 6. Is that a fair estimate? Is that the target? And also, how does the margin difference? What is the return ratio target that you're looking at? IRRs, if you have a number in mind.
So our management, our board has given us a clear mandate. There is a floor and a ceiling. So we are targeting a return of 15% on these projects. And while you would have also seen in the news, GMDC has inked an MOU with our state power utility GUVNL for downstream integration of the entire coal from these 2 blocks for energy security of Gujarat. That would be 4,400 megawatt. These plants will take 4 to 5 years to come up. In the meanwhile, GMDC will be selling this coal in the open market and ramping up its production to meet the requirements of these power plants.
So 21 million tons by 2030, right?
And I'm still not speaking about, haven't spoken about the 3rd block, which is an unexplored block.
Yes.
It is far away. It will take 2 years for exploration to get completed, and then we will take it towards operationalization.
Got that. Mr. Singh, so 21 million tons is the target of coal mining, right? By 2030.
Yes, and if the 3rd block
that will be additional, over and above this.
That will be over and above this. I can't give you clear figures on that, but a strategy on that would be available in a year from now. That again has a peak rated capacity of 5 to 6 million tons per annum.
Mr. Singh, good morning. Just to, you said there's an important public hearing on the 24th of this month.
Yes.
So all this is dependent on which way that goes, or this is just a formality?
Both ways, it's a formality, but it's a very important interaction and outreach with our stakeholders. We
Which
are very
is the locals, right? I mean,
the locals. And
yeah. And has there been any opposition to this? I mean, has there been any problems with regards to the plans?
we have been very well received in Orissa, and GMDC has adopted a very novel approach about solving these blocks, since it is not our home state, and we had a comfort earlier training in of working in comfort of our home state. So we have adopted a CSR first strategy. When we got a blocks, our CSR division was the first to open up employment training centers, taking care of community needs, taking care of health needs. We have been on the ground for a year. That gives confidence with our stakeholders, with our partners, because these the locals are going to be integral part of our journey of prosperity.
All right, Mr. Singh, couple of quick details then. You have a target of 14,500 crores, which seems a very, very tall ask, because you're looking at revenues go 4x from what you've already delivered. How confident are you that we get out there? Or, you know, and also if you could tell us the rare earth opportunity, by when does those numbers start kicking in? If you can't give us a number, at least give us a timeline. By when do we hear some kind of progress on that front?
Okay. Nigel, big numbers, but they are based on very solid foundations. There are three pillars of this growth. One is deepening this existing lignite business, which we know very well. We know our customers very well. We know how to ramp it up. So a major part of the capex is going to go there, and revenues are the largest amount of revenues are going to come from there. Say in excess of 7,000 crores is going to come from there. This is our home state. We are very confident. Again, there is an agreement for large volume of takes in 3 to 4 years with our state power utility. So this is very sure. This is a very sure bet. The coal blocks, these are auction blocks. GMDC, and if you delay an auction block, there is a penalty. If you activate early, like what GMDC is planning to do, there is a rebate on the premium that we play. GMDC is going to work towards a strategy of working to gain 12 to 1,500 crores of rebate in till 2030. So this early activation strategy is in line with that. If we are able to activate early, like I said, next year and start monetizing it, we would have paid for the land acquisition for the bigger project through the rebates only. So that is the strategy. Finally, we need money to take care of the environment and plan for the future. Critical minerals is the play. We have been nominated by the government of India for a rare earth asset. We will be releasing details soon to you.
How soon, Mr. Singh? The rare earth opportunity for the last many quarters, every time we have to push you a little bit. There's a big promise out there, and you've specially mentioned it in your annual report as well. But tell us, by when do we hear about the next big announcement on rare earth?
Next big announcement soon, but by 2028, we should see numbers clocking in. Before that, there's a lot of hard work, there's a lot of capex outlay, and a lot of activity on the ground. We will keep you updated.
And 14,500 crores is the target by 2030, right?
Yes.
And you have such a big aspiration. What about capex? You're lining up capex of 3,000 crores per annum. Your cash flows, operating cash flows are nothing close to that. So there'll be some debt component, or will you be looking at bringing a strategic investor? Explain the funding about that. Capex we have 3,000 crores per annum. What is the peak debt, and is there a strategic investor coming?
I'll answer it in the debt equity ratio mode. So in till 2030, with this capex and a lot of debt that we will be onboarding, which will be in excess of 2,000 a year, 1,500 a year, the debt equity ratio never goes above 1. It touches 0.9 for 2 to 3 years, and that's it. Then it starts leveling out. Funding, where do we fund it from? While for the greener initiatives, for these critical minerals, we shall be approaching the markets, and there is good cheap funding available there. As far as our core business is concerned, a large part of this capex, we are in advanced talks with our state government-owned non-banking financing company, GSFS, that would be taking care of these solid fuel assets. So these are the plans on the table.
Okay, so we leave the conversation here for now. Thank you very much for joining in. By the way, Tata Motors slips again. Yesterday it was down 5.5%, and this morning it's currently down close to about 2%. Maybe some disappointment on the PME drive, the subsidy scheme for four-wheelers not being a part of the latest news flow. That stock is under pressure. Get into a break. On the other side, we'll connect with Atim Kabra, Director, Business Development and Strategy at Astra Micro.
Okay, the market's right there where it opened with about a 95 odd point pop, and things are sort of holding, but not so far. It's just too early. I think it's not even 10 o'clock for the market to really catch a big trend one way or the other. So we'll have to watch this. 25,018. Remember, the day's high last 2 days has been about 25,112. That's an important technical sort of barrier to cross, and it's not been able to do that. So that goes, and then we can probably sort of rest more comfortably and look at higher levels. Astra Microwave is the next company that we want to talk to. The company signed a MOU with Premier Explosives for a strategic alliance to develop and sell multiple products jointly. And let's talk about this more with Atim Kabra, Director, Business Development and Strategy at the company, Astra Microwave. Mr. Kabra, good morning. Thank you very much for joining us. Prashant here. Could you tell us the scope of this?
Morning.
Good morning, sir. The scope of the MOU that you've signed, what products that you want to work on together? What are the timelines here like? How much would you invest? And ultimately, what's the addressable market here that you're looking at?
Sure. Let me tell you the philosophy behind this MOU. I think together is a very powerful concept which can give life to a vision of complete Indian-made and designed products, not only for India, but also for the world at a very, very competitive pricing. And I think we are fortunate that Mr. Chaudhary and Mr. Gupta at Premier Explosives share the vision which Astra management has. And together we can create complete products using our respective expertise. Now, when I say this, I think it is fair to say that the government has given a significant impetus to the industry. And it is now up to us how we seize the moment and work together to create products which are built on our respective niches and core areas of operation, helped and put together by the various defense labs and the DPSU, who have all been a part of this beautiful ecosystem which has been created. So that is the vision which has been guiding us to put together this MOU. And it feeds into our LEAP strategy, where lean and learn, and node, which I call a network of defense enterprises, which is an informal network which we are trying to create, where people can come together and develop on their respective niches to create this product line. So that has been the core philosophy. On the products which we are talking about, Astra is in the process of developing a few nice products which have huge applications not only in the Indian market but also global markets. And these products are very well complemented with warheads and detonators and the propellants, which Premier has expertise in. So that's how we are looking at it. In terms of numbers,
is this,
sorry.
Mr. Kabra, is this a more enabling kind of a MOU which gives you the optionality to work, or specifics, etc., are yet to be worked out?
Specifics in terms of numbers are yet to be worked out. As you very rightly put, it's an enabling MOU. But we have a few products which are clearly identified, on which there is a meeting of minds, that we can put together our respective expertise in these products and create a completely different paradigm together.
Stay on, Mr. Kabra. That's the listing of Sri Tirupati Balaji Agro. This is a company which is engaged in the business of manufacturing and selling large flexible bags, industrial packaging products like woven sacks, woven fabric, narrow fabric tapes, etc. It's a positive opening. Sri Tirupati Balaji's first stick is with a gain of about 18%, 97 rupees versus the issue price of 83. It's a small company. They raised about 70 crore rupees via the IPO. They will use part of the proceeds to repay their debt. 83 was the issue price. The stock is listed at 97 rupees. It had seen very strong subscription, close to about 124 times. We were expecting a positive kind of a start, and that has played out, 17.5%. But Mr. Kabra, you said that you have identified certain products, right? At least in the initial phase, which you will develop as a part of the MOU. So can you tell us about those products? Name them. For these products, what is the total addressable market? How soon will you be able to come in the market? And what's going to be the division of revenues in the investment?
Okay. I'll give you the broad categories if that's okay with you, right? Okay. We are talking about missiles, right? So as you know, multiple players in the defense industry have entered into the missile space, right? Okay. So if you have the propellants, if you have the defense electronics, and if you have the control systems and the exterior shell to deliver the entire package, you're talking of missiles. So now they are complete, and rockets, for example, are the low-end version where we can actually add in homing systems, RF systems, and guidance systems to make sure that they reach the intended target. And you've seen the efficacy of these rockets, which has been established in the ongoing wars in Israel, especially, and as well as in the Ukrainian-Russian war. We are talking of protection systems where we can check with the radars and identify incoming objects and take countermeasures which can be provided by Premier explosives, right? So together, it's actually we are limited by our imagination in terms of how important these protection systems have become in this new era of electronic warfare. So these are few areas, and we are in the space business. Astra has a sizable order book in space business. We can create space-grade products. Premier has a presence in the space business where they make rocket propellants, right? So together, again, that's another area where revenue can be generated. But to your point, it's nothing immediate in terms of revenue impact. Our guidance is there for the year. But if I have to put in place sizable business blocks, which will deliver significantly higher business in the forthcoming years, I think these are steps which are necessary and in the right direction.
So you maintain your FY25 revenue guidance of 1,000 to 1,100 crore rupees? Would you like to narrow it? Will you end at the upper end, lower end? Because in percentage terms, it's a very wide range of, I think, 11 to 22%.
We hope to be in the upper end, towards the upper end. Yeah, I think 1050 plus should be the target. Yeah,
all right.
should be easy.
All right.
Yeah.
Hi, Mr. Kabra. Good morning. This is Nigel on this side. You know, it's always good interacting with you. Mr. Kabra, I was just looking at the shareholding pattern of Premier Explosives. And there's a Mr. Atim Kabra who holds stake out there. Is it you?
That's me. So
That's
it's
you.
a very deep relationship as an equity holder, which I've had with them when I've been holding it for more than a decade and a half, probably.
Yeah.
Right? Yeah.
Yeah.
So
look,
there's a comfort level, and I've seen Premier grow into a very, very significant strategic company. And so therefore, making the call and putting it all together was relatively easy. But it's not restricted to, I just want to add, it's not restricted to Premier alone. We are in conversations with multiple people. And actually on your show also, people like, I have progressive leaders like Mr. Munjal of Paras, etc., have already come in and have spoken about, the need to grow through moves into different areas.
No, the reason I ask you is because, that's a very important role that you have as well, because you're heading Astra, and now, there is a bit of a collaboration with Premier Explosives. And since you've been a holder for close to a decade, as you just told us, you understand the company well. So do you think there are further business opportunities for both these two companies going ahead? Could you all stitch a deal between the two or something on those lines?
No, I don't think anything, if you're referring to a merger or acquisition kind of a thing, I don't think anything like that is on the cards. Okay. We are completely separate businesses, but our strengths are complementary. And I have friends across the industry, various founders, right? And I think to the credit of the industry, I think everybody is sharing this vision of node network of defense enterprises coming together to create newer products. It's just a step, which I've taken here.
Just wanted to clarify. So you're heading Astra, but you're an investor in Premier Explosives, right?
I'm a director at Astra. Significant equity holder in Astra, small equity in Premier. Yes, so I've known the management.
Got it. Appreciate you, Mr. Kabra, joining in, and congratulations, on this recent deal opportunity. So wishing you all the best, and we look forward to chatting up with you, maybe post you declared your Q2 numbers as well. Well, time to get Mitesh back with us. Mitesh, it's 10 a.m., but unfortunately, we have slipped a little bit from the top. Your view on the Nifty and a couple of stocks, if you could share with us.
Good morning again, Nigel. And it's a mild dip. Actually, it's not a very severe dip. But what is good is that the Bank Nifty, I think, that's where some kind of strength might come in. So one, I think I expect the Bank Nifty to head towards 51,400 again and possibly even test 51,700, 750 levels. So we look at some banking names. In fact, HDFC Bank does feature on my stock list today. That's a buy with a stop below 1640 and look for targets of around 1690 here. And the other stock is all within the pharma. I think that's given a good reversal after a few days of pullback. So buy here with a stop at 1530 for targets of 1600 plus.
Okay, we'll slip into a very short break. On the other side, we'll invite Manisha to focus on the commodity market. Stay tuned.
Okay, welcome back. Let's shift focus to the commodity markets now. Manisha is here with what she's got her eyes on. Commodity in focus. Manisha, good morning.
Morning, Prashant. Thank you for that. Well, I'm looking at nickel, a commodity that we don't talk about very often, but this is an important ingredient when it comes to steel and also EV batteries now. And for the nickel prices, for the intraday market, we've seen prices gain up by 2%, and it's off 5-week lows that it was trading with earlier. And this has happened after an important statement from Russia's Putin saying that they are looking, that the Moscow should perhaps look at considering limiting exports of uranium, titanium and nickel there. Well, if you look at nickel, we have seen these exports are being limited in retaliation to the against West, is what also Putin says. Now, interestingly, Russia is the world's third largest producer and exporter of nickel as well. The largest quantities clearly come in from Indonesia and Philippines there. But when you look at the prices herein, we have seen, while some reaction there, but from the highs of this year, we still are much lower in sense of prices there. So from $21,615 a ton, the level that we saw in the month of April or May, the price is currently trading at 16,100. Before this, the prices also have seen a decline to almost 15,500 as well. So a bit of an uptick coming in on your screens because of that. Interestingly, Russia produces 8% of the global nickel production there. Indonesia has become the largest producer. 5 years ago, Indonesia was perhaps 25 to 30%, but now 50% of world's nickel clearly comes in from Indonesia. But the thing that's bothering the markets is the market surplus, really. There have been various reports suggesting that there is nearly 9,28,000 ton capacity expected to come online in the next 3 years. Also, when you look at Fitch report, it says that the nickel global surplus stands at 253,000 tons at this point in time. If you look at the demand from the EV market there, well, that has been constantly surging, but so have been the supplies for that matter. In 2018, the EV demand was at around 60,000 tons. It's estimated that by 2025, it would reach 665,000 tons as well. So for the longer term, by 2025, the expectation is that you could be looking at higher prices going forward. But until then, it's between $18,000 to $24,000 a ton that the markets do believe that the nickel prices could sustain going forward.
All right, Manisha, thank you very much for that. So nickel is what's on Manisha's mind today, and that's commodities for you. Well, let's move forward and get back to stocks. Honasa is what we want to put the focus on once again. That big block got done. Nimesh is here with details. Nimesh.
Hi, Prashant. So, as you said, big block got done. The stock is under pressure today, and expectedly so, because it happened in the open market. Nearly 11% equity got changed hands. We had indicated that the private equity investors, including Sequoia, was a big seller in today's block. I understand there is a good demand, so it's a mix of both domestic and FIs who've participated in today's block. Interestingly, if you look at the shareholding pattern, the mutual fund exposure is quite low in Honasa. So, looks like some domestic mutual funds were buyers because they got an opportunity at these levels, and it was a large block. Interestingly, now there is a 60-day lockup for the investors to sell further. The combined holding of all the private equity put together is close to 39%. Sequoia owns close to 23. The investors have sold 11% today. So there is further 26% which can be sold. So there will be supply overhang, but not for the next 60 days for sure. But need to see as to who all have participated in today's block deal. So 11% done at a discount, and hence stock is under pressure.
Okay, Nimesh, thank you very much for that. Down about 5% or so. The market was coming off a little bit, was up about only 70-80 points. It's moved back up 110 now. So 25,000 plus on the Nifty is what we have. Just to revisit some of these names here, Zaggle is up another 5% after yesterday's 10% move. JBM Auto, we highlighted in the morning, that's up. It's moved up to being up 4. Aurobindo Pharma is up about 3.5%, 1560. Although Aurobindo was there in the morning as well. Keynes is up 7%. So I think it's moved to the high point of the day. 49.80 on Keynes Technologies. Moti Sons is coming up. Small jeweler, 5% higher. 246, 247 on Moti Sons. And I think this week's been good for the stock. Inox Green is up 2. Gravita India is up 3. I think La Opala is up 2.5%. And just some of these sort of big volume-led gainers that are coming up on my screen. We'll take a break. We're back with our special segment. It's the economy. Lata will get chatting with Tata Steel's MD and CEO, TV Narendran, from the sidelines of the AIMA National Management Convention. Stay tuned. That's coming up.
Hello and welcome to a special session of It's the Economy. Special because it's coming to you from the sidelines of the All India Management Association's convention. I have with me Mr. TV Narendran, who has just taken over as the Senior VP at IMA. Mr. Narendran, thank you very much for your time.
Thank you, Lata.
But these are economy questions. And the big question confronting the economy is this flood of Chinese imports. In fact, it's becoming a global problem. EU has also imposed its tariffs. Now, the heavy industries ministers spoke about between 7 and 12% tariffs. You think that's good enough?
Well, at least it's a good beginning, because it's a problem which we last experienced in 2015 when more than 100 million tons of steel was exported out of China. It's the same thing happening now. And the big problem is they are selling steel at prices at which they are losing money. And this is having its impact on the rest of the industry across the world. Other countries have taken action, and I think India should certainly look at taking some actions.
You know, during the results presentation, you told Nigel that even at that point, the Chinese steel was losing money at about $50 to $60 per ton.
That's right.
It still continues at that level?
Absolutely, it does. In fact, since then the steel prices have dropped. To some extent, the iron ore and coal prices have dropped, and that's helped support or limit the losses, let me put it that way. But the problem is acute, and the financial statements of the Chinese steel companies state the obvious. And the chairman of the biggest Chinese steel company, Baowu, has also himself said it publicly that the industry is in very bad shape in China. So I think we should not let them export their problems to us. I mean, that's a fundamental point.
You know, Naveen Jindal, when the minister said that it will be about 7 to 12%, Naveen Jindal said that's not enough. What is a good number according to you? 15, 20, what would be the right number?
No, I know this is a difficult one simply because there are a lot of steel consuming industries out there who like low steel prices, right? So I think it's about finding a balance where the industry can make reasonable profit so that it can reinvest that money to build new capacities. India is blessed with iron ore. Why should a country like India, which is blessed with iron ore, be importing steel? You know, it's quite ridiculous. So I think the point is, we have iron ore. We shouldn't be exporting iron ore and importing steel. We should be converting that iron ore into steel. We should be a big exporter of steel.
It should be ours. It should be our terrain. But 17%, that's what some brokerage reports told us.
I think it's like this. You know, honestly, in this industry, unless you make a 15 to 20% EBITDA margin, you will not have the cash flows required to build new steel capacities. Because building steel capacities is a lot of money. It's $1 billion, a million tons roughly, right? So you need that 15 to 20% EBITDA margin, and otherwise you will not be able to build capacity. You can survive, but you will not build new capacities, and India needs new capacities.
I'll come to that EBITDA per ton. Yeah. I'll go from economy to the micro. But just to finish this argument, how is China looking right now? I mean, it's about 6-8 weeks since we spoke to you after your results. Has it improved or has it gotten worse?
I think it's not improved, certainly. The problem is being felt in China as well. Most of the Chinese steel companies continue to lose money. There are some closures of capacity, but the demand is also not recovering. So the problem is there. And while the steel industry is an example of what's happening, but I think this is applicable to all industries. I mean, so I think as other countries are also seeing, we should have a view if somebody like China is exporting a lot of whatever they produce at prices that kills the local industry, what should be our view? Should we allow it? Should we not allow it? And which is what the EU is doing, the US is doing, Canada is doing, everybody else is doing.
Yeah, I know EU has gone with for solar and for EVs. That's true. But yeah, as you say, there is the local unit, steel using unit, which will be rejoicing when import prices are lower. But to come back to the demand situation, how is the demand situation in India? Will it be hit if you got this tariff and prices became higher?
I don't think so, because prices have dropped $100 in the last 6 months. Okay. The demand was fine 6 months back. So I don't think anything is going to change that way. I think the point is in India, well, the demand is reasonably strong. It reflects the GDP growth rate. This is a lean quarter because of monsoons. Construction activity is a bit low, which is typically where a lot of steel goes. Auto has been going strong, but of course, just now we're looking at the stocks and dealers, etc. But otherwise, auto has been strong for the last few years. We look at commercial vehicles, slow down a little bit.
MHCV was slowed down for the August number.
Passengers slow down a little bit. Two-wheelers look strong, which means the rural economy looks like it's better. So overall, steel consumption is okay, but we are not able to export because international prices are so bad. In fact, that's another problem.
But how is global demand?
Global demand is okay. Some parts like the US is fine. Europe is still struggling to recover. Middle East, Africa is not bad. Southeast Asia is okay.
But you're getting undercut.
Absolutely. I think the problem which we are facing, everyone else is facing, right? And hence they're closing borders.
So this quarter margins could be lower than Q1?
Well, yes. But like I said, coking coal prices and iron ore prices have also dropped. Coking coal has an impact on our costs. It's not dropped enough. At today's steel prices of what it is, I think coking coal should be much lower, you know?
No, 13,800 rupees per ton, if I remember right. Second quarter EBITDA per ton.
Yeah.
It could be how much lower you think?
I won't give you a guidance because
but the delta could be lower, you think?
Delta could be lower, which is what we guided in the last
you did.
analyst call. Yeah.
Yes. What about Netherlands? Even in Netherlands, you were EBITDA positive.
Yeah.
Will it remain positive but a lower level?
Yeah, so it will be positive. I think in Netherlands last year was a bad year for us because we had one of our blast furnaces down for a relining. That blast furnace is back. We are back to full production. So our internal challenges that we faced last year are no longer with us. We are operationally running well, but the markets are bad. Again, a reflection of what's happening in China and elsewhere. So yes, it will be positive EBITDA, but obviously margins and spreads are squeezed because of what's happening.
So if you want to guide us for FY26, do you think by then, because of volumes, you will be able to do a better EBITDA per ton? What can you guide for 26 and 27?
Sure. I think the critical milestones for us this year, one is UK, moving ahead with the transition plan. That will at least stop the bleed for us in UK because that was a big negative for us. Netherlands, which was traditionally positive but last year negative, will be positive this year and will continue to be that way. Obviously we are concerned about the margins because of the market. In India, the big milestone is getting the Kalinganagar expansion completed. The blast furnace should start in the next couple of weeks. So that's a 5 million ton expansion. So most of that volume will come through for us next year. Higher volumes in a high fixed cost business like ours means more competitiveness. So yeah, so that's where it is. So I think in all three major sites, we should see some positive developments.
But UK will be positive by the end of this year, you think? Will the losses stop or does it take?
We had expected to be EBITDA neutral in the second half of the year, but we are still again watching spreads and margins because that was assuming normal spreads and margins. But we're watching that, but certainly you will not have the bleed that we've seen in the first quarter and you will see in the second quarter.
You aren't finding buyers for Netherlands or UK and UK?
So Netherlands was always a cash positive, EBITDA positive business, okay? And hence there was an interest from Thyssen, from SSAB in the past. As you're aware, because of competition commission issues and various other issues, it didn't manifest, it didn't happen, right? So I think we are now focused on creating our own future for Netherlands, and UK with this transition, we think can stand on its own. Netherlands always stood on its own, didn't need support from India.
Just one last issue on India, the Supreme Court order for states allowing you to charge for the mines with retrospective possibility. You've set aside 17,000.
It is in our contingent liability.
Contingent
We've not provisioned
liability.
for anything.
But can you give a more exact number? Will all that money be needed?
No.
Has Orissa government come back to you?
No. I think, that was us being conservative. We had a demand notice for 126 crores in 2005, and we fought a case which we won. But since it was being discussed or it was being appealed in the Supreme Court, we just kept a calculation based on that, right? So there's no demand notice for us for that amount. I think we are clarifying that. It's not that we have a demand notice or anything. I think what we are waiting to see from the state government is what is their demand, right? And I think they're themselves conscious that a lot has happened since then. The MMDR Act came in 2014. The government is anyway getting a lot more royalty than they did at that time. the government is conscious that they don't want to kill industry by giving a bill. And it's not just for Tata Steel, it's for the entire mining industry in Odisha, and not just steel. It is coal and bauxite and everything else. So it has a huge impact on industry and the economy in Odisha. So the government is today deciding if there is a demand, what should the demand be. Once we have a demand, then we'll decide. First we will look at the demand and see whether we can contest that. We are a long way from coming to a conclusion on that. And as far as the prospective, this is the retrospective part. As far as the prospective is concerned, we are talking to the government, and the government is also looking at options, because ultimately it's about making sure the industry, not just steel or Tata Steel, the entire downstream industry survives, whether it's aluminium, whether it's cement, because it impacts limestone, power.
And there is jobs in upstream.
Absolutely.
In the entire
So
economy,
I think there needs to be a
impact.
more considered call, which is what I think both the center and state are trying to do.
But chances are the contingent liability is very conservative, and you may have to let go of much less than that. Okay. On that positive note, Mr. Narendran, pleasure speaking with you. Thank you very much for joining us in this conversation.
Congratulations.
Honasa, that's the stock lower by 5% after nearly 11% equity worth about 1750 crores changes hands at an average price of 500 rupees per share. Sources tell CNBC-TV18 that Peak 15 and Sequoia are among the key sellers.
Tata Steel is higher in trade after the company signs a $500 million grant funding agreement with the UK government for green steel.
Varun Beverages rallies more than 4% after shares split in a 5:2